Ashu Singhal joins us now, Managing Director with Mahanagar Gas Limited. Good morning. Thank you for joining us. I'm going to put perspective just for our viewers here. Post the cut in CNG prices in April, have you seen a pickup in volumes? If yes, how much, and what has been the average sales?
Yeah, good morning. The post CNG impact will take some time, but although we have slightly seen the uptick on around 3.45 was the volume prior to the price cut. Currently, we are seeing close to 3.6 MMSCMD. So there is a increase of 1.15 to 0.2 MMSCMD.
Could you then tell us the trend in terms of sequentially, how do you see things moving? I mean, do you think this quarter volume number could be better than last quarter, and is that the trend in making?
I mean, it will stabilize after a while because there are other issues also that it takes some time for the growth for the volumes to pick up. But going full year, we expect a growth of 7 to 8%, around about that much in the volume. Currently, we have already seen 0.15 MMSCMD growth, which is around 7%.
Point is taken, but could you also give us an update with respect to how's been the car conversion rate, because that had slowed down in the previous quarters? Are you seeing some sort of recovery in car conversions now?
Normally, we see around 60,000 per annum, so around 15,000 per quarter. So because of the high prices last year, the conversion was less. Earlier, 2 years back, we were seeing a conversion of 80,000 per annum, around 20,000 per quarter. So this quarter and the year onward, we expect to go about 20,000, 21,000 per quarter, so around 80,000 plus in a annum.
Okay, so 80,000 per annum is something that you're looking at. But talk to us about what's been the overall uptake and overall, momentum that you are seeing from industries at this point of time. Because as my colleague was also highlighting, unlike Gujarat and Delhi, wherein there is a bit of push on using gas, there's no major push as far as the government is concerned with respect to the gas utilization in the Maharashtra region. Are you expecting some sort of change there? Any sort of fillip coming in from the regulations?
I think the both NCR market and Mumbai market are fundamentally different. In NCR, it is more regulatory driven, and the government pushes there to abate environmental pollution. And CNG was introduced with the intervention of Supreme Court in late 90s. Whereas in Maharashtra, we have not seen that much of push from the regulatory side. So whatever numbers which we see or whatever penetration from CNG side is primarily on terms of commercial viability and economical viability and preference given by the consumers. Only there are some regulations like diesel vehicles are not allowed beyond certain period, 7 to 8 years. They are only allowed to run in Mumbai. After that, they have to move outside in the state. Similarly, CNG in the taxis, mostly they have converted, but Ola and Uber are again free to choose whatever fuel they want. But purely on economics, it makes sense to convert on CNG.
Yeah, and in continuation with the point, Ashu, that you were earlier making, because post the price cuts, CNG did become very attractive compared to, petrol and diesel. Compared to previous averages, the attractiveness of CNG over petrol and diesel is still lower. I'm guessing it's a matter of time that OMCs will start cutting petrol and diesel prices as well, as and when that happens. What will MGL stand be? Will you also cut prices? Will you be choosing volumes over margins then?
See, it is a balance, a pure balance between the margins and the volume growth and also the alternate fuel price. As you rightly mentioned, I don't think petrol and diesel prices can be reduced to a great extent because last year OMCs were selling at a loss. So there is some sanctity now, and we will be taking all these three things into account. What is the volume growth we expect? What are the conversions which are happening? What is the margins and what is the alternate fuel cost? So it's a dynamic thing. We will take a call as and when that happens. If petrol, diesel prices are reduced, we will see how to act on at that point of time. Currently, we are very comfortable in around 60% discount to diesel and around 49% discount to petrol, considering the mileage advantage which CNG has over the petrol. So that's substantial delta in our view, which is, comfortable for us to make the conversions happen.
You talked about walking the tightrope between margins and volumes, but as things stand right now, what's your assumption how margins will look for the entire year?
Last year we had 9.5 rupees per SCM, and prior to that we have 8.5 rupees per SCM. So if you see last 5 to 7 years trend also, it is 8 to 10 rupees per SCM, barring 1 year wherein the domestic gas prices were abnormally low. So we had more than 11 rupees per SCM margins. So 8 to 10 is the range we expect. Maybe 9.5 was the last year. So in the similar range, or maybe around 10 is the expectation for the current year.
Lastly, before I let you go, but on the Unison acquisition, is the timeline still, to complete it by end of FY24, or is it going to be a bit delayed?
See, it was having a lock-in period of 5 years, which is getting completed in September this year. So we expect that by November or late October or November mid, we should be able to acquire the 100% shares and transfer the money to the party.
To have you on the show, Mr. Singhal. Thanks so much for taking the time out and joining in today.